So here's the big question. Is Nvidia a smart buy, or is its stock getting a little bit too risky? Figuring out where Nvidia is headed is key. It could mean the difference between a solid multi-bagger return or having to experience a severe drawdown. Let's break it down. Nvidia has made a name for itself in the semiconductor world, especially with its GPUs that have taken gaming, AI, and data centers to the next level. CUDA, for example, is a technology Nvidia developed that allows their GPUs to handle complex tasks far beyond just rendering graphics. It's what made their hardware a go-to for things like scientific research and AI development. But with all this success, we've got to ask, is Nvidia in a short-term drawdown onto new heights, or are we hitting a peak? Whether you're already invested or just thinking about it, understanding Nvidia's role in the tech world is crucial for making smart decisions about this stock. Nvidia started out making GPUs for gaming, but they quickly became essential in high-performing computing, AI, and more. CUDA technology really set them apart, letting their hardware tackle complex tasks in fields like science, finance, and AI development. Over time, they've expanded beyond gaming, becoming a leader in industries like autonomous vehicles and cloud computing. Today, Nvidia isn't just another tech company. They're shaping the future of entire technology sectors. Now, here's something to keep in mind. Nvidia has what Morningstar calls a wide economic moat. This basically means they have a significant competitive advantage, especially with their GPUs and the CUDA software platform. But here's the kicker. Once companies start using CUDA, it's really hard to switch away from it. CUDA isn't just a tool, it's a whole ecosystem of libraries, compilers, and development tools that companies heavily invest in. Developers spend a lot of time optimizing their applications to run on CUDA, and switching to a different platform would require recoding and reoptimizing, which is costly and time-consuming. Plus, with the deep integration of CUDA into Nvidia's hardware, the performance gains and stability are hard to match elsewhere. So in simpler terms, CUDA makes it tough for companies to move away, keeping Nvidia firmly entrenched with companies that use it. Financially, Nvidia has been on fire, especially in AI and data centers. For Q1 2025, Nvidia reported trailing 12-month revenue of $79.77 billion, which is a massive 208% increase from the year ago trailing 12-month revenue of $25.88 billion. Additionally, they achieved a record quarterly revenue of $26 billion, up 18% from Q4 and up an incredible 262% from the same quarter last year. Part of what's made Nvidia so successful is their constant innovation, like the new H100 and B200 GPUs. These are some of the most advanced chips out there, and they're making a big impact on Nvidia's stock. The H100 is huge in data centers, handling complex tasks like AI training and processing tons of data quickly. The B200 is all about edge computing, processing data right where it's generated, whether that could be smart device, autonomous vehicles, or machines on an industrial line. Both of these GPUs come with a hefty price tag, but for companies that need top-tier AI and data processing, the investment often pays off. But it's not all smooth sailing. Nvidia's stock has been pretty volatile with a beta of almost 1.7, which can be a wild ride for investors. Even Jensen Huang, Nvidia's CEO, recently sold nearly $323 million in shares leading into last month right before a big market drop. That's got people wondering if he's hedging his bets with all this volatility. Also, keep in mind that Nvidia is not the only player in this space. AMD and Intel are stepping up their game in GPUs and AI. If they catch up, Nvidia's market share could be at risk. Now, let's make this clear. As of August 12, 2024, Nvidia's stock has surged by an insane 2,721%. AMD has done well too, with their stock up 299%, as you can see here, but they're still playing catch up by a huge margin. Then down here at the bottom, you've got Intel, whose stock has dropped by almost 58%. These numbers show just how much the semiconductor landscape is shifting, as when we look back just a few years ago, they were pretty much neck and neck with each other. As of August 12, 2024, Nvidia's PE ratio is at 64. Historically, we've seen their PE drop by more than 50% during downturns, sometimes even dropping below 15. Given the current economic climate, it wouldn't shock me if Nvidia's stock took a hit of maybe 66% or even more than that. If Nvidia dropped to around $50, that's when I'd start getting really interested. And if it drops to 35, that's what I would call a back up the truck kind of moment. Nvidia's got an incredible growth story, and with a PEG ratio of 1.24, it's close to being fairly valued. But in this market, I'm all about buying with a strong margin of safety. So as much as I respect Nvidia as a company, I'm holding out for a pullback before I jump in. Now, just to be clear, this isn't financial advice. I'm just sharing what I would do in my own situation. If you're thinking about Nvidia, make sure to do your own research and talk to a financial advisor to figure out what's best for your specific situation. I'd love to hear what you think about Nvidia stock. Drop your thoughts in the comments below. And if you're into tech stock analysis, you'll definitely want to check out the video I'm going to release next, where I dive into another big name in the industry. Don't forget to subscribe and hit that notification bell so you don't miss out.